Ross Mack, you know what? Welcome to the show.
Thank
Now
you.
you
Thank you
should
so
just
much for having me.
you should just know that we have fun over here. Okay. Yes, we're a business show. Yes, we're talking about real life stuff. But you are now a Omi homie. You're
Let's
in.
go.
All right.
I'm homie. I'm rocking. I like it a lot.
Listen, he got Ross. Look, we both got Ross up in here. You see that? Like that's how I know
Listen,
we.
and
It's about to be a situation.
I was gonna say something. I really love your name. I mean, your name's so good. I might name my kids Ross Ross back to back.
You know what? That's what
That's
I'm
you
saying.
got to name your kid Ross Ross.
Ross.
You got to have it twice.
I'm gonna
That's when
take
you know
that.
it
You know what I mean?
counts.
Let me try to tell you. See, that's financial, sweet talk right there. That's what I'm trying to tell you. That's what I'm feeling happening here.
You don't
Uh,
do it twice and it happen. You gotta do it twice.
that's a fact. So
All
how
right,
y'all doing today? Let's
let's
talk.
jump into it. Are you ready?
Born ready.
So, one, the documentary Get Smart with Money, right now out on Netflix. And you were a part of this, and it was a couple other financial experts or influencers who have developed over time. One of the things I liked it, but one of the things I loved about your background too is that I felt like you were maybe the only one with like a true finance background. And that doesn't mean that other people can develop their understanding and grow from experience and that kind of thing. But I also felt like it was a little bit more anchored in some expertise.
Mm-hmm.
My hang up is that there was nobody single. How did y'all create this whole show and there was nobody single? No single mom, dad. Everybody was married and living with a partner.
True. You know what's crazy? I didn't really even notice that so much until you pointed out. And one thing I will say is I wasn't in charge of casting, so to speak, right? Obviously, I obviously put out a casting call, but that was just to one individual. So I wasn't, I didn't have a say in the other three, but hopefully we get a season 2 and we get some singles, some single moms or single dads, single people, single bachelors or bachelorettes, who knows?
Yeah, I said the same thing on me, but my question was always this, and it may not have been in your episodes, even though I was watching yours about the S&P, about trying to get him to invest more than $1,000. That baby said, "I'm not investing." He said, "I got $1,000. I'm gonna put a stack on it." He said, "That's all I'm giving you, right?"
That's all.
But I felt his fear, like that. It was like it was like visceral. Like when you said 10,000, he looked at you like you had lost your mind. He said, "I'm not putting 10,000 on nothing. I don't know where this money is going." What are you saying?
But I love the way you said that last part, right? I'm not putting 10,000 on nothing. I don't know where this money is going. And that's what happened in our community. It's a strong either distrust or just a lack of knowledge when it comes to it, because unfortunately we're not taught nothing about investing, right? I said it in the film, we taught to be consumers, but we're not taught to be owners. And so when it came to investing, which was amazing, right? Able to see him from point A to point Z was like, all right, I'm not investing at all. Okay, I opened up a brokerage account, but I ain't put no money in it. All right, now I'm gonna put some money in it. I'm only gonna put 1,000 because in my mind, right, in his mind, it was like, I'm okay with losing 1,000. And I think that, what our community needs to do is get smarter about the importance of investing. And I talked about why we need to invest, but for Tease, I thought it was such an amazing moment for him to start putting more money in there. And I think once you start studying history, you realize like our money is actually losing its value by just keeping it in the shoebox or keeping it under the mattress or in my bank, even for that matter. You're losing money by keeping it in your bank. Right now, inflation like 8-9% right now. So that right there alone let you know your money's losing 8% by purely leaving it in the bank account. So for him, I think what helped him was putting money in the S&P. And it was so many things we talked about. And I think that was the only thing that made the final cut, right? We talked about so many other strategies, different stocks. We even talked about crypto. But I thought it was amazing because he ended up having a trust for it after, our community, we don't get trust for banks, especially not being able to see your money, right? Like not being able to see your money is a very hard concept to grasp.
No, I think that's right. So just for our listeners, a little bit of background. So the way that the film is set up, every financial expert gets a person with a particular financial situation, and the person that Ross was working with was Tease Barber, who's now I think with the Atlanta Hawks. Is that right?
Yeah. Tease Tabor, he with the Atlanta Hawks right now. Yeah.
Okay,
No
so
way.
So and what they worked on, which I want to jump into because I think this is more your specialty, is around like how you invest in stock market. Is that what you would say? Yeah, that's where you squarely are. I was watching it too, and I was thinking when y'all started talking about the S&P 500, and I started thinking how, and then E-Trade came through. Are there particular brokers or brokerage accounts or places that you refer people to that they should open up? Because I think when you think about like, oh, a Morgan Stanley, a Charles Schwab, where you want to kind of open up your account, it also relates to like, well, I don't have that much money to put in. So
Great.
where do I
Yeah,
where do I go?
That's a great question. And so back in the day, it was really a hard conversation, right? Because you'll be like, is it TD Ameritrade, E-Trade? Is it this? Because back then, right, I'm talking, kind of 2008 when I started, it used to cost $12.99 in order to buy a stock, and then $12.99 in order to sell it. Those were called commissions. So in order for you to really even get out here, you definitely needed money. But what I will say, through all the new technological advances, you can buy a stock and sell a stock for free now because of companies like Robinhood, Acorns, Webull, right? And E-Trade, even despite the fact that when I started out, it was $12.99. Then I saw it go down to $7.99. Now it's free to buy stocks. And that's the beauty of the game now. And so I have always, liked E-Trade because that's what I started out with. I love their technology platform. It gives you, it's way better than like a Robinhood, for instance, right? No shade to them. I have money with Robinhood too. But for me, I always like E-Trade. And so what I will say, though, is there's no real big difference because there's no commission fees for the most part.
But wait a minute. Okay, so what you talking about? Because you said you can buy something for free. Okay, we need to back that up.
I'm so sorry.
Okay.
So here's what I mean. So say a share of Apple's like $160. 10 years ago, what I'm saying is in order to buy one share of Apple, consider it being $160. Not only did you need $160, you also needed the commission fee. The commission fee was $12. So you really need $172 to get one share. So now you can buy one share of Apple for $160, period. No commission fees. So I'm sorry, I didn't mean to say free like that. And to the listeners, what I meant by free is commission free. There used to be commission fees that brokers would charge you. Technically, that's how they used to get paid. But now, because it's so much competition, there are no more commission fees. And I would thank companies like Robinhood for that, because the whole business model behind Robinhood is you get on here, we're democratizing this. Everybody get on here and you can buy and sell stocks, even crypto, for free. And so now, like, you can buy stocks on Cash App. And what I'm saying is that there's no commission fee. So I didn't mean you could get a stock for free. I just meant that you didn't have to pay a commission. And we used to paying commissions, right? Like, no matter what, like, it just consider it a tax to buy something. That's what commission fees were.
Listen, I think, you see, I didn't got gray. I got this extra gray popped up here when you started talking. You know what I'm saying? I was trying to get it done, but it popped up, Ross. We have no clue where to start this process at all.
So that's why the film was instrumental, because, once again, there's a lot of parts. Mind you, I was working with him for a year. So it's a lot of film that did not make it, right? In fact, they probably had enough film to have, four episodes or everybody, because they filmed for over a year. And so what I told T's, which I would tell anybody, whether you make $1 million or $100,000 or $50,000, the first thing you do is start by having the highest probability investment, which in that instance, if we're talking stocks, we were saying buying the S&P 500. So the S&P 500 is the most diversified, well, one of the most diversified investments you can have, because you're going to own, by inherently buying one share of the S&P 500, you're owning 500 companies. So the best part, if you remember COVID, March 2020, April 2020, the stock market went down a ton. But if you own airline stocks and cruise line ships, those are down over 50, 70%. So the idea is saying, let me get the most diversity possible. Let me own not only airline stocks, but let me own some tech companies. Let me own some utility companies. Let me own some, companies like Walmart and Costco, what I would call staples, things that we need every day. And so when you're first starting out, and one of the greatest investors, Warren Buffett, after me, he's second best, I'm first.
Okay,
is that
you better.
I got to pop my shit. But what he going to say is 88% of anybody. So like, they're professionals that are paid a lot of money to manage people's money. They're buying and selling stocks all day, right? And what the statistics will show you is that when it comes to the S&P 500, 88% of the time they're going to outperform, right? Just owning S&P 500 alone, 88% of the time is going to outperform the professionals. So literally, if we're in a room of 100 people, only 12 people that are professional investors are going to do better than me and you just purely putting our money in the S&P 500 and just holding it and watching it go up, because on average, it goes up 10% a year.
But let's talk about that, because S&P 500, when I go onto Cash App or when I go onto Robinhood, I own individual stocks in the companies that are on the S&P 500. So when you say that, are you speaking to, I'm going to search for S&P 500, I'm going to invest there? Or are you speaking to, I'm going to search on the app I'm going to look for the list and I'm going to search for companies on it? Clarify that. Clarify whether when you say, S&P 500, okay. You're saying I'm literally going to go on E-Trade and I'm going to I'm going to search S&P 500 and I'm going to put my money toward that.
So here's the thing. So the S&P 500 is an index. It is a basket of, the S&P 500 index is a basket of 500 stocks that are trading on the stock exchange, right? Of those 500 companies, you have companies like Apple, Netflix, Amazon, Google, Visa, Disney, like the Exxon, like the list will go on. There are 500 companies, right? And what I'm saying is that, the actual S&P 500, the index costs like maybe $4,000. I'm not saying buy that. Instead, what I'm saying is buy an ETF that is made to truly replicate what exactly all 500 companies are that are in the S&P 500. And so what that is you have a company like Vanguard. You heard of Vanguard, right? It's a huge asset manager, they a lot of retirement accounts, or Fidelity, like all these type of companies, right? Well, Vanguard has a ETF, which is an exchange traded fund. I'm not going to complicate it, but once again, all that is doing is mimicking everything that's in the S&P 500, and it's even cheaper to own it. So, for instance, like it'll be the ticker, right, which is the abbreviation to buy it. So if you own Apple, the ticker for that is AAPL, right? If you own McDonald's, it's like MCD or something, right? Google is GOOG. And the ticker for this particular S&P 500 ETF for Vanguard is VOO. So the same way you would go into your E-Trade or your Cash App and say, hey, I want to buy, Google or Netflix, you could say, I want to buy Vanguard's S&P 500. And you would type in VOO. And that's how we did it for me and him. So you typing in VOO, mind you, that's only going to be about $200-$300. But that alone, for $200-$300, you're now owning 500 companies. And so that is the first investment I recommend anyone make, because it is, on average, once again, 10% a year. Years is going to go down. Years is going to go up more than 10 and down negative. But on average, if you take the average since it's been around, it's roughly 10%. Each year it goes up.
I feel like it was important to clarify that because I kept saying, I'm looking on here and I'm typing in this and it ain't on here. So what are they talking about when you're talking about? Because I just have been individually investing, right? In the company, in the products I use, right? And the things
which is a very smart thing to do though, right? Like, I think that when you look around, there's so many things that we use, right? Every day. I got iPhone, right? That's Apple. If you're putting if you're putting the Omni show on YouTube, well, guess what? Google owns YouTube. You might want to buy a little Google, right? If you're doing Instagram Live all the time, well, Facebook owns that, which is now Meta, right? If you looking, if y'all talking about Microsoft Word, this will Microsoft, right? If you look like you shop a lot. If you are on Amazon.
Wait a minute. Don't tell my business. Hold up.
You definitely are Amazon Prime member. You got more Amazon boxes in the house than your neighbors. That means you might want to own a little Amazon. And so I think when you first starting out, it's definitely smart to buy the things that that you use, because at the end of the day, if you are drinking Starbucks every day, then that's something, right? Like those are the best things to start. But the very first investment I always recommend is the S&P 500, because you don't have to think. You don't have to outsmart, because there are years when you could buy Apple and it goes down. But on average, right, the S&P 500 is one of those investments that's going to give you the diversity of owning things that you probably wouldn't have even thought about owning that a good portfolio should have.
Well, Ross, how did you start? Because I'm out here loose. Okay, clearly I'm out here just wilding out right now, and so I'm just trying to how did you start? How did you decide, Ross, that I'm going to do this? I'm going to start investing. Whatever I have. How did you start?
Yeah, I started my portfolio like cheese with $1,000 in college, and the reason I started was because I was in class with this Asian kid, and he was day trading in the middle of class. I've never seen that before. And I asked him, bro, what are you doing, dog? Why are you not even paying attention? And I'm looking, bro had like $25,000 in there, and he was day trading. I'll never forget. And at that moment, I'm like, I need to be doing what bro doing. And mind you, this is 2008. So we're in the middle of a recession. So the very first stock I bought was, it was a utility. It was come on. It was an energy company. I'm about to say it. It's gonna come back to me. Long story, it didn't do well. Like I thought it was gonna go higher than it was, but I was just watching it. It was like watching paint dry. That's how I started. So I started out buying a single name stock, and I probably should have bought an ETF, right? An index that's representative of the overall stock market. So when I'm betting that the overall stock market goes higher, it individually picking stocks, right? I didn't start out by saying, oh, let me invest in the stocks that I use, right? Let me invest in the stuff that I know. I talked to my econ professor, and she, sent me down a goose chase. But actually, it was good advice. But, I was a young kid. I wanted quick money. I was looking like, okay, it's not going.
Once upon a time, I thought I might start day trading. And then I'm like, I ain't got time to be sitting. What is happening? So let's speak to types of investors, right? For me, it's more like angel investing in startups. But there's investing in the stock market. There's investors in that way, which is investors in startups. And then there's this like profiles of investors who are invested in the stock market. So let's break it into like habits that people may have. So like day trading is one way, right? Maybe you just are every month, and like what you gave the tease was every month kind of making sure that he is, putting money there. What are the kinds of profiles of people in like that you can bucket maybe? The ways that people are going about investing. Because I think like having people understand like, oh, I'm more like the busy person who can't sit and watch, the stock move all day. Yeah. So I ain't gonna make it day trading, but they may be pushing themselves to day trade because they're trying to make that quick money.
Yeah, no, great question. At the end of the day, all investors, you bucket them based on what their risk tolerance is. So Ami just said something in the sense of she likes angel investing and venture capital, right? Those are individuals who are willing to take on more risk, right? That's when you're investing in a startup company. You can't buy a stock in it. This is privately owned, and I'm hoping that they hit a home run. The success rate is very low because these companies are not established yet. However, if you do get it right, you can make 50x, 100x on your money, right? That's massive. But that not a lot of people have even access to that. But when it comes to the stock market or bonds for that matter, right? You say bonds are a safer investment on average than the stock market. Because bonds they have to get paid back first. And obviously, if you're investing in government bonds, well, you obviously going to get your money back. That's just literally loaning money to the government, loaning money. You can loan money to your municipalities, right? Whatever city you work in, if they issue bonds, right? Everybody's borrowing money. They issue bonds to build a new road, right? Build a new park, build a new airport, right? These are, municipalities. And then you got the stock market. So the stock market is also a riskier investment. However, if you are a person who has the time, who's sitting there trying to, day trade, right? That is a short-term trader. That is a day trader. This is a person that is buying and selling stocks sometimes within minutes, within days, within seconds. It could be, right? But that person, once again, I'm going to go back to the statistics. In a room of 100 people, only 12 of those people that are day trading are going to do better than a person that is purely a long-term investor that is passively investing. What I mean passive is you can just put your money there, sit back, put your heads back here and relax, right? But on average, a person, for instance, that's owning the S&P 500, they're going to get about 10% each year. Whereas day traders, only 12% of them will do better than making 10% a year. And the others will end up doing worse than. And so for a person that doesn't know much, I start off by saying a big percentage of your portfolio should be, and I said it in the film, owning two types of index funds, that being the S&P 500 and the NASDAQ. The NASDAQ 100 is 100 tech companies. And all the big tech companies you can think of, Amazon, Apple, right? Those are going to be in there. Microsoft, Google, right? Those are going to be in there and a few others, right? We'll call it 96 others. But after that, that's when you can say, okay, I now want to have some individual stocks. I want to own some individual stocks as well. I want to, see if I could find the next Amazon, if I could find the next Netflix, right? And that might be, hey, I want to buy some stocks. I want to buy some Tesla, right? I want to find the next company that's going to be the next big thing. Then you could own individual stocks. But if you're a person who doesn't have the time to sit there and day trading, be a long-term investor. Owning individual stocks, you still can be a long-term investor. You're just not trading the stocks every other day, every month, or every year for that matter. You might sit and hold and own it for 5 years, and you'll look up like, wow, I quadrupled my money. Right? Like that's what a lot of investors do. The most people in this world are long-term investors, right? If you think about most people's retirement, they don't even know what's in there. They have some form of a target date fund. Like, the 2053 target date Fidelity fund. Well, what's in there is Fidelity is literally saying, what's your age? Okay. So by the time you get closer to retirement, we're going to have the least risky portfolio for you. But the younger you are, we're going to give you the more riskier things. And that's just nature, right? Like right now, if you're nearing retirement age, if you're 60, right? And you're like, I want to retire in the next 3 years. Well, guess what? You shouldn't be owning 100% of your money being in penny stocks. You can lose all that in a second. But the younger you are, if you're 20 years old, you could put a lot of money in penny stocks, lose it all. And guess what? You can make more money and get back to investing. But you don't want to ever be in a position of losing your life savings as you get near retirement. So like a target date fund, what I'm talking about, like a 401k, your retirement account, you're going to start out by saying, I'll have more stocks. But as you get older, you're going to have more bonds than you have stocks, because once again, bonds are a safer investment. When it comes to who you listen to, one, I'm always say my brand, Maconomics. But after that, I watch CNBC like, a young athlete's going to watch ESPN, right? Every day they watching ESPN. Every day I'm watching CNBC. And it's all about just speaking the language. But once again, once you learn it once, it's not rocket science. Buy the best companies in the world the same way you like to buy the best luxury brands in the world, right? Or you got your favorite restaurants. Well, the same concept is, right, if you like Chipotle over McDonald's or this, that, then own some Chipotle stock. Chipotle went crazy during the pandemic, right? Like where you shop at, right? And so at the end of the day, once you learn the basics, which the first basic is starting out the most diversified portfolio, then from there, ask yourself, what do you already use? And then the next thing is, what does this company do better than any company in the world? Right now, there's a new iPhone 14. My phone is truly messing up right now. And they did this on purpose. But Apple's such a gorilla, you can't even complain. Like literally my face, I can't unlock my phone with my face ID no more. They want me to get a new phone, but everything I got about 15 Apple devices in my vicinity right now, right? That's one thing. But after that, you ask yourself, does this company does something better than everybody else? Will this company be around in 5 years? Are they on the brink of some groundbreaking technology, right? There's going to be a lot of virtual reality and, metaverse stuff in 5 years. The whole world by 2030, not the whole world, but the vast majority of people are going to stop selling combustible engine cars, right? Meaning cars that put gasoline in it. Most cars in 10 years are going to be electric. What companies would profit from that, right? Is it electric? Is it electric charging stations, right? Just like gas stations, well, you need charging stations, right? Or is it the batteries that make the electric cars? Is it the chips, the semiconductors? So so many things that you want to ask yourself. But you're talking to.
I don't think so. I don't think cars gonna be all electric. I don't think so. I think
Google California governors banning combustible engines by 2035. I want you to Google that while we're on the phone. Then I also want you to see China's doing it. Just watch. Just Google it. Because pollution is a real thing.
We're going to go to hybrids. I think that the oil industry, to uproot it, is a whole nother animal. So like I hear I see what you're saying in terms of like what they're saying, but we thought we'd be flying by now. So I mean, we thought we have all these things was coming out, back in 1990. Oh, the 2000s gonna look like this, look like that. I think that it's gonna take a little bit longer than we think to uproot. Now, I would love that because it'd be great for the environment. But
so
to uproot,
I don't disagree with you, right? People will still have gas powered cars. They just gonna be like old schools. But there will be some people that are gonna put their foot down, right? There's obviously people that work at Ford and Chrysler and any other American-made company you can think of is obviously going to be on DC lobbying saying, hell no, I don't want that. But you got a lot of people that are going green for the environment that are saying we do need, electric powered cars. And that's why every car manufacturer is already making a electric car. There's a Ford pickup truck. They're going to be they're electric semis, right? Like then it's going to be that. 10 years from now, the world's going to look way different. You might be able to get in a taxi. You might get in a taxi where it ain't no driver, literally driverless taxi.
We got to get ready to hop off, but I do want to point out something that Takia said. I think because what you spoke to is like, this is accessible information, right? And it's actually not hard once you learn it once. And I think that learning it once is something that people should actually really think about, right? Losing and waiting is actually the challenge. So like what you spoke to Takia when you said that is like literally like losing and waiting is the key. And it's like, if you can, I think by joining investment clubs like yours, like Maconomics, or if you're looking at, other people that you trust out there, there is like a slew of like people. One of the things though that I do love that I will say about you is the actual finance background, which is, I'm big on that. So the idea of losing and waiting is like not being afraid of that mindset shift.
I want to talk about that, right? Because, and it's understandably so. In our community, we impatient. We want to be rich now. We want to show that we got it now. But if you literally understand the eighth wonder of the world, which is compounded interest, if everybody listening, just look up what compounded interest is, it'll show you what the idea of putting $300, $400 a month aside in an investment that's going to get you 10% annual, you'll see that in 25, 30 years, you'll have $1 million. And it sucks when you're hearing it at the age of 50, like, I don't got that time. But if you starting your kids out at day one, right, when they turn 1 year old, you starting to put $200-300 in a portfolio for them. So when they turn 30, they already have $1 million, right? So the idea is saying being patient, which we not, and I understand it. I want to get rich yesterday too. Like, that's the whole world, right? But understanding that a great investment strategy is being a long-term investor, because by owning the best companies, like right now, the stock market had a terrible day yesterday, right? Oh, inflation's still high as hell, right? Stock market had its worst day yesterday, and I don't know when we're going to release this, but the stock market had its worst day since June 2020. And the reality is inflation's high. The Fed is raising interest rates, yada, yada. There's a lot of stuff going on, but 3-5 years from now, it ain't going to matter. Nobody want to lose money. But the idea of me, what I told Tease is, by investing monthly, you take out the emotion. Because right now, if you was to try to start investing, you'd be like, oh, no, I don't want to invest. The stock market was just down. Let me wait a minute. But then you wait a while, and guess what? You miss the opportunity to get in for cheap. One of the greatest investing quotes is, be fearful when others are greedy, and be greedy when others are fearful. Be fearful when others are greedy, and be greedy when others are fearful. And that means literally, when the stock market is down a lot, that's when you buy. When the stock market is up a lot, that's when you be a little more skeptical. Let me chill, because the stock market got to come down. So I can assure you, you're going to lose money if you buy a stock today and try to sell it tomorrow, right? Like, that could potentially happen. But if you're buying a good company today and plan on selling it 5 years from now, it's almost impossible to lose.
You know what? We're gonna have to have you back. We're gonna have to have you back, because I got questions. I want to demystify this even more, just in the sense of like how things actually work. Because yeah, my thoughts on like company going public and all of us actually being investors that are keeping it at a certain stock level. I'm also always wondering what's happening there. But we got so much we can talk about.
Oh, yeah.
So where can people find you, Ross?
People can find me on all social platforms at I'm Ross Mac. That's the letter I, the letter M, the letter R, OSSMAC. I'm Ross Mac. Visit my website, maconomics.com, MACONOMICS.com. Also got a podcast too that we're going to have to do a little swap. It's on Sirius as well. It's called, it's called Money Music Culture. With my co-host, he plays in the NFL, and we talk about money through the lens of the culture, so music and sports. But that's that, man. I look forward to connecting, but I'm also grateful for the opportunity to come on y'all platform.
Yeah, thank you. Thank you for coming. This is great. And
Oh,
everybody make sure you watch the Netflix documentary, Get Smart with Money, which is featuring Ross and some great other financial experts and some real life stories. So check that out.